All right, welcome back. And in this continuation of our tutorial, we are going to talk about how to enter following our rules on both the third, which is the main entry candle, and the fourth candle. That way, you will not be missing any good opportunity. Starting with the third candle as your ideal entry candle when there is no second candle entry criteria met. Okay. All right. So, how to trade the third and fourth candle together? This simply means having two entries running simultaneously, but not at the same time, because there is 1 hour interval between the third candle, which is your main and ideal entry candle, and the fourth candle. It's 1 hour interval because we are trading and analyzing using the 1 hour time frame in our charting software. Okay, so looking at our chart here, we'll use the most recent impulse move and how we would have found our entries here. Okay, so looking at the most recent impulse move, we had a buy, then this bullish impulse was terminated. Now, because we have our direction already, we know we are only looking for bearish entries. We are not interested in all the bullish impulses that we see here, okay? We are not also interested in entries that form at the termination of a bearish impulse. We are not interested in looking for those opportunities. However, we'll mark them for the purpose of learning. So in this case, we've marked this, but we didn't need to mark this because we are only looking for the termination of this impulse. All right, so having marked this termination candle here, we have also drawn our exit price line and then set our stop loss bar or slab. Now, our third candle is our entry candle. Of course, when it happens here, you are looking at second candle we have to close for you to have your third candle. So that's 2 hours time. Okay, so you saw the termination of this bullish impulse. Now, the termination candle did not make an engulfing of two or more candles, which ruled out the possibility for entering on the second candle. So you already knew that you will not be entering on the second candle. Instead, you will enter on the third candle. Now, the third candle opened and it's already supporting a string. Yes, initially this might take a slow turn to tell you whether it's going to go straight into forming a new impulse, right? Or is going to give us a fragmented move, which is when it doesn't support the bias, the closing bias of the previous two candles. All right, so in this case, you enter on the third candle immediately because the condition for entering the third candle was met. Whether or not the third candle will go bullish or go bearish, okay, that is inconsequential. What is most important is that the condition for entering on the second candle was not met, and you do not have to overthink entering on the third candle. You have to enter on the third candle. So that rule having been met. Now, will you still enter on the fourth candle if the third candle closes bearish in support of the new impulse forming? The answer is no. So when should you enter again on the fourth candle? And that takes us back to a previous situation that occurred. So we are going to look at a situation here that occurred when to enter on the fourth candle. All right. So let's go and look at that. So this candle here, remember that we do not only enter only when there is an impulse that is terminated. We can also enter when a new impulse is expected. Third candle, of course. Once we see two string form, we expect the third candle, if it is favoring our directional bias, we expect the fourth, or rather, we expect the next candle to continue in that bias. That is our basic rule. So once we see two candles of same colors, we expect the third candle to take in that pattern. That's because of what the market uses to make any move, which is called market momentum. So the market has already gained momentum that is strong enough to push it to the direction that is expected. So, but if that is happening in a third candle, that third candle becomes an entry candle. And we always see what happens on the entry candle, that the entry candle moves opposite the entry bias. So in this case, we have the third candle, that is our entry candle. Again, we say we do not question whether or not to enter on the entry candle so that we will not miss out an entry opportunity that is good enough. So when we see this string form, we know that we are entering on a third candle. So in the case we have to enter a third candle, we have entered a third candle, and our third candle goes bullish instead of going bearish, right? Because the third candle did not close bearish but close bullish, it has given us another entry opportunity, which is at the fourth candle, and that is going to give us a double entry. So that means we have one entry held on negative up until the candle closes against our intended entry bias. Then we have to enter on the fourth candle. So this is the only time when entering on the fourth candle becomes necessary, because this question will always come up. Why should you choose between entering on the third candle or on the fourth candle? And because this will always come up, we have to state the rule that will guide it. So these rules guide our entries and our exits. So now this is the situation for entering on both third and fourth candle. You cannot enter on third and fourth candle when the third candle, as in this case here, closed bearish in support of the existing bias. Okay, the fourth candle's entry will not be necessary because already the third candle has moved into profit. But if the third candle's entry moved into loss, while the stop loss has not been triggered, when the candle closes, you can enter on the fourth candle, and that's to give you double entry privilege. Then you maintain the same stop loss because it's the same stop loss that guide whether second entry, second candle entry, third candle entry, or fourth candle entry, as the case may be. So this is the case when you use your discretion to enter the two candles. Now, do you have any reason not to enter on the fourth candle? Oh, that would be you trying to minimize the risk, but it is not necessary to doubt yourself. So don't be sentimental when your rules are met. So there are times when you could be sentimental when you're not trading with any rules. But when you are trading with rules, the rules prevail. You do not question, you comply with the rules. So when you have the third candle that goes into loss, but your stop loss has not been triggered, enter on the fourth candle, no questions asked. That way, you have two entries running, which becomes an advantage for you, of course, if the stop loss is not triggered. But it could increase your loss if the stop loss goes, if the market goes to trigger your stop loss, haven't entered on the fourth candle. But you do not have to worry about what happens next. All you need to do is you have followed your rule. Now wait for the exit opportunity to come out of your entry, either in profit or in loss. But looking at what we have seen so far, you see there was only one time when we had to suffer loss, and that was the very first time. Okay, when we expected to enter on the third candle, stop loss was close by up here, and instead of going into profit, since we need to hold to see an impulse, the market did this distribution and went into triggering the stop loss. So that was the only time loss happened. Every other entry here, and that stop loss was just 20 pips. Every other entry here has been in profit down to this point. So you measure how much profit this has been, is worth over 150 pips. In fact, 150 pips. I will still have a few more levels to go down. All right, so that having been stated, now when do you exit the current running entry? Because you have your entries running from the third candle here, if you are taking the third candle, or the fourth candle here. if you had taken the two, third, and fourth candle as we have explained. Now, when is that supposed to be? Remember that this entry candle, we said again, was not the ideal third candle, okay? The ideal third candle was this candle here, all right? But why we didn't use it as our entry candle was because we have our rule that states we should enter when the exit line is broken. And in this case, if you drag the exit line up here, you'll notice that the third candle opened above the exit line. So for that reason, we needed to wait for the next candle that will open below the exit price line. That was what made this the entry candle. Okay, and this became the fourth candle. Otherwise, this is the ideal third candle following our rule. So if you understand this, then you will not need question your entry rules once your criteria for entry is met. So now, having known your entry rules, how about your exit? This again has to be as stated. You enter and hold until you see an impulse in the bias of your entry. Then you exit only at the impulse termination. So that is, as we see an impulse here, if this current candle closes bullish, then the closing price will become the exit price. So all of these moves that will be corrected upward wouldn't be your problem because you will have to look for the next entry. So in this case, what are we looking for? We are waiting for the termination of this full-fledged impulse, bearish impulse. Right now, we are still in the market. So the total profit made so far, if you calculate from the ideal entry, 1.22945 all the way down to 1.221, that's about 80 pips. You see, 80 pips in one day, added to all other profit that have been secured already. That's been over 150 pips, right? And then remember that the total pips expected for the week is 200 pips. So if you've made 150 pips already and you still have about 40 pips left based on what is happening here, you will notice that you have the chance to make still the full 200 pips, not missing out on any entry opportunity. So we have explained why you should not doubt your entry rules. Enter always on the third candle, no questions asked, unless the requirement for entering the second candle is met. Otherwise, enter always on the third candle and enter on the fourth candle if the condition for fourth candle entry is met. So you have two running trades. Okay, so no need to think whether or not to choose your third candle for entry or fourth candle for entry, for that could cost you to lose a good opportunity. But worst case is if you missed the third candle, which is your entry candle, for one reason or the other, then you can still enter on the fourth candle, and that leaves you with still only one entry. So we have explained when you can have the two third and fourth candle as your entry candles to have two entries running at the same time, or when you have only the third candle running or only the fourth candle running. So you have only the fourth candle running only when you miss entering on the third candle. No questions asked. Missing it because you were not watching when the third candle opened and when the market was still at the opening price. Then the entry price is the opening price of any of the candles, not in the middle. So the opening price of any of the candles that indicates your entry. So if it is the third candle that indicates your entry, then you must enter as soon as the third candle opens, no questions asked. If this is the fourth candle you missed the third candle, then you must enter at the opening price of the fourth candle. No questions asked. Then if you are entering double entries, when the third candle doesn't go into profit but closes against your entry bias, then you must enter on the fourth candle to give you a double entry advantage. It also has a risk factor, which is it could multiply your loss by a certain margin. Okay, so that having been said, your exit is only when you have seen an impulse happen and then your impulse is terminated. So you exit on the closing price of the terminating candle or the exit candle, as the case may be. That's when you exit in profit. You exit in loss only when your stop loss is triggered. At no other time should you alter your exit price for the stop loss, which is set automatically. While the exit price for the entry, you can set it as profit to the maximum projection you have made already, which is why you should always know your directional bias and project. So the exit when it is an impulse is the total move of the impulse will be your exit for correction. So you can set that automatically if you know you will not be there watching all the moves. So if you have said that already, if it's 200 pips, you just set your take profit to 200 pips. But if you are going to be watching, then you might exit once any current impulse is terminated. So that having been said, we have come to the finality of our tutorial to prepare you for your fast trade fair retail trading exercise. So register for the fast trade fair retail trading and do not miss out in any month. Do not lose this opportunity to improve your financial situation and also master the art of using money to measure your productivity or your performance. So use money to measure the result of your performance so you can improve on your performance and use that thing you have learned from this trade fair to improve on your business and your life in general. Hope to see you register for the fast trade fair. Welcome.